Well, it's time to wrap it up. We've had a kick backside day in our major markets. I mean, we caught these things right, and you had that good information in your hands well before the fact. Now, we started out this morning wanting to sell failure to take out the overnight session high. We specifically mentioned 67.50, and we said that was the easiest trade to see today. The first area we saw reasonable support was in the 50 to 55 area. We could have gotten long there if we got our proper setups. We did not get a setup. The second area we saw that might offer us an advantage was in this 1841 area, plus or minus. So this was where we started out with our buy 1 and our buy 2 recommendation, but we never got a retest. We never got a setup to get long from. Every time this market started down, we made new lows. And in that situation, unless you think you're a knife catcher, you can't put that type of trade on without really increasing your risk. There is some support at 25. Best support's down here in the 12 to 15 area. And so we'll see what holds right now. I think stops below 25 is on the way. If this market were to close right now, we'd be looking for a spot to sell it. We'd like to sell up against this low right here, so we'd be trying to sell 33s to 35s with a close right now at this price level. So I'm not saying I'm not grinning ear from ear on the calls today, but Charlie done pretty good when you get right down to it in our major markets. Interestingly enough, the minor markets that we covered, gold and crude, really didn't move all that much for those contracts. Sometimes that happens because we normally expect our major markets to be less volatile and a little more quiet or quieter than our minor markets. Our minor markets, especially crude and gold, when they start to move, they can really move. And you can actually be wrong a couple of 3 times and still make your business plan in those contracts. We keep making new lows, so I'm going to change the parameters so we can get it all on one screen. Big day. Big day. I mean, this could be, if the selling really gets ugly this afternoon, this could be, 40. We already have 40 points. This could be a 50-point day. It was the fall of 2008 when we started to expect that. So this market is moving down big time, and we don't see any signs of buying yet. Again, this morning, the idea came from, could we extend the overnight sessions range? And we had pretty good resistance in this area in the overnight, and the number that came together was 67.50 right here. So we said it was the easiest trade to see. We could have been a buyer in this 50 to 55 area. And we could have been a buyer down here in this 41 area, plus or minus. But as you can see, we just keep making new lows. I mean, just here, F period, we did not make a new low. G period, we make a new low. H period, we make a new low. I period, we make a new low. J period, we don't. The market comes back a little bit. Our high volume number that pulled the market down to it in H period acts as resistance in K period, and the market continues to sell. So if the market were to close right here, right now, we'd be selling 31, 32. And then we'd be selling the 37 to 40 area. Got to give it some room, so our first buy would be down in this 20, 22 area. And then in our 12 to 15 would be buy 2. Big markets, not a lot of reasons given for selling today. It just happens. The market flipped to the sell switch here recently, like this week, and it's been selling. And when good news is ignored and the market breaks off of that, you got to go short. So we had a great day in the E-mini. We had a fabulous day in the note and the bond also. And the note this morning, we really like the long side of the market for a couple of reasons. The 30-year auction, you can't move paper if the market is headed lower. And so every other week, the primary dealers have to engineer a rally to move as much paper as they can for the Fed. They got a sweetheart deal with the Fed. The amount of paper they can't move for the Fed will buy back from them. So they have no risk. So we came in wanting to buy 9s to 13s. We emphasized the 9. We'd rather buy 9s rather than 13s. We said we might have to pay up, and you can just see this market opened in the overnight session. 4 held. We had a nice support at 8 to 12, hence our 9 to 13 buy recommendation. We had a higher low and a higher high yesterday. We wanted to be buyers, so everything worked out pretty much as envisioned. Some days it's not like that. Some days, I mean, you really have to scratch, and some days it takes a couple of 3 hours before you got confirmation of which way the market's going to move. But this morning, I mean, everything's set up just as envisioned, so no complaints. We've put a couple of training videos up on our YouTube site with today's date. We did it on the bond, the note, and the E-mini, or they will be up there this afternoon. Go over and take a look at them. And if you have any ideas for videos you'd like to see in the future, let me know, and we'll get them made over time. So our buy recommendation was 9 to 13, and we emphasize 9, and you can see Z period, A period, C period, and even D period right here. You still could have bought 13s. So you had 2+ hours to put this trade on, and then we start getting some really good help from the E-mini, and in the market it's off to the races right there. So you could have bought 9s over an hour and a half. You could have bought up to 13s over the next hour and a half. Great trading. We had some resistance at 17 to 20, and then our last resistance area of the day, number 4, was 28 to the buck, and our 4th area held. So right now, as far as tomorrow's trade, normally we expect a pause day after a trend day. Normally we expect a pause day after the auction has completed itself. So we'll play for a pause day. We want a sell failure to take out 28 to the buck, and if the E-mini is, the bottom is falling out of it, and we've got heavy selling there, we do not want to be short the financials, neither the note nor the bond. On the buy side, the last rotate down was 21, so we'll make 17 to 21 buy 1, and we'll make 9 to 13 for buy 2. My guess is we're going to find pretty good support in the 16 area. So leaning against 16 is the trade that I see. And I see a pause day tomorrow, too. I don't see the market breaking out and making new highs unless the E-mini is just cratering. And that could happen. And the reason for that is that you need no more than down ticks to keep the high-frequency trading programs on the short side, and you need no more than upticks to keep them on the long side. And right now we're seeing downticks. Okay, on the 30-year today, we wanted to be long in the 13 to 17 area. Worked out just as envisioned. If you had the intestinal fortitude to hang on, you'd have made a point off of our entry points. But $500 to a point was there for you and pretty easy to stay in for $500 or a half point move. But we had a 13 to 17 buy, and you had Z, A, and B period, an hour and a half to put that on. That was our buy zone. One exit would have been against 34, and the second exit would have been against 16. This thing moves in half point increments. So our trade today is sell failure at 16 to 21, 16 to 20. On the buy side, the last rotate down was 6, so we'll make 5 to 9, buy 1. And we'll make 29 to 01 for buy 2, but I really don't expect this to get back to the 133 level unless the E-mini turns around and is really showing some strength. Gold was actually pretty quiet today. Did not do much. That's a rare day in gold, but things have slowed down. The volatility's come out of the market that we had last fall. So it's not trading with as much explosiveness as it did, but it can. And it's a place to go for a beginner or novice trader to put some money in the account quickly, if you can manage the risk. If you can't manage the risk, it's not a good contract to learn to trade on. It takes a lot of loot. Got pretty good resistance at 25, got pretty good support at 15. That's a 10-handle trading range. So we'll make 15 to 17 buy 1, pretty aggressive. Peace breaks out in the Ukraine, we don't want it. If the E-mini rallies back with a lot of strength, we will open it up and we'll go to our second buy zone down there, which will be 10 to 12. I don't think anybody's going to sell gold that has purchased cash gold. It's not done as an investment. It's done to make sure that you have something if the economies collapse, that you can survive and get through it. And given the political instability, given the shooting that's going on in many spots of the around the world, I just can't see people getting rid of their gold. G20 economic policies will hold people in those positions, and if we do get fighting between the Ukraine and Russia, we'll get the next leg up. In my most humble opinion. Okay, crude today did not signal that Russia and the Ukraine were going to start shooting at each other. Really pretty quiet day, but we've moved up about $5 off of this trouble in the Ukraine, so a lot of that is already priced into it. What we've taken away is the short side of the market. If you can't deliver crude in to satisfy yourselves, you're not going to do it as a spec trader. There's too much risk. So you take that side out of the market away, and then you'll have speculators playing for more shooting. I mean, what's harder to get, peace between two countries or start a war? It's harder to get peace once the shooting has started. So that's where we are. We had hoped this morning to sell the 75 to the buck area. Thought I'd go a little higher. It didn't. So we'll put our sell out at 50 to 75. Sell 1. And then 104, 104 and a quarter for sell 2. On the buy side, we broke this thing out basically at 103. So maybe stops below 103 is a possibility. So why don't we make 103.15 to 102.90 is buy 1. It's a little cute. And then 50 to 75 is buy 2. If peace breaks out, if the Russian ethnic Ukrainians throw in the towel and walk away from the buildings that they've taken over, we can trade down. If they hold out and the shooting starts between the Ukraine and the people that have taken over the buildings, then crude oil should trade higher. And last but not least, the euro. Boy, the euro just keeps going up and up and up. Mario Draghi at the European Central Bank must be pulling his hair out. The European Union ministers and the central bank want the euro currency to head lower so they can export more goodies outside of the EU so they can get some growth, pick up some growth. And every time they turn around, the euro goes higher. Traders are selling the yen, traders are selling the dollar, and they're buying the euro. So we got 139 right here. Today our second sell level was 90 to 139, so we'll make that S1 once again. And then we'll make 39.15 to 39.25 our number 2 sell point. On the buy side, we broke this thing out at 75, so we'll give it a little room. 65 to 75 will be buy 1. And then we had hoped to get long this morning at 40 to 50, and the low was 51, so we'll make it again 40 to 50 for buy 2. Long as the tensions go on between Russia and the Ukraine, I think the euro is probably going to hang in there. People will take money out of equities and they'll go for currencies, and on a one-day relative basis, they're printing less money relative to the United States and the EU than they were at the end of last week. That's all I have for April the 10th. We'll see you all bright and early in the morning. I'll put this YouTube link up in the room this afternoon. It'll be on the website. And look forward to working with you bright and early in the AM. We're 75 degrees outside, but the wind is blowing pretty close to 30 miles an hour. So the cold fronts are still a little too close to us to have a warm day without a heck of a lot of wind. Hopefully that's not the case in your neck of the woods. Y'all have a great evening. See you in the morning.